Everyone is trying to predict where is Bitcoin going next, but there is one indicator that actually does it. And no, it's not RSI, MACD, or any of those lines pretending to be signals. All of those lag. This one tracks real money flowing in and out of the markets. If you're not using it, you're basically trading blind. Might as well start writing horoscopes. The best part, it's completely free, updates daily, and you can add it to your TradingView right now. By the end of this video, you'll be able to predict Bitcoin's direction on your own. On TradingView, there is an indicator called global liquidity, and you can add it to whatever price, futures, commodities, stocks, crypto, not for Memecoins because it's too granular and fluctuations in the global liquidity are not going to be shown on the Memecoins. But let's look at how Bitcoin and global liquidity indicator correlates and if we can spot any patterns. Quick disclosure, there are some patterns, and that's why I love global liquidity index. And I often trade global liquidity and fear and greed index. Those are the two indicators that helps you to show where we are in the cycle of the market, whether it's globally macro bull market or bear market, if the liquidity is expanding or decreasing. Because all of your assets that you're trading, they're denominated in dollars, whether it's crypto, gold, stocks. The other pair is dollar. So one thing for the assets that you're trading to increase in price is for the underlying value to increase. However, the denominator can also decrease, causing the increase in the value. If the dollar is decreasing in value, but then your asset will be increasing in price. Also, if the global liquidity, aka dollar, the global mass of dollars, not only just printed dollars, but also the dollars that are created on the bank accounts by the Federal Reserves of different countries. If I have $100 and I put it in the bank, the banking system in most of the Western world countries, it's a fractional reserve system where that $100 put on the deposit in the bank, and then the bank can issue $1,000 worth of credits and loans to the people and businesses, because they only have to keep 10% of the loans that they issue. So if I have physical $100, I put it on my checking account, they take that $100 and they make it 10% of the amount that they can loan out to businesses and individuals. So then they go and create $1,000. So on their books, they show, oh, $100 came in, boom, 1,000 immediately created. That's all automated. And global liquidity tracks that specific amount, how many zeros were created after that $1 that you deposited into the bank account. Let's open a chart. This is Bitcoin chart. On TradingView, you can go into the indicators and you just type in global liquidity. So I mentioned today on the stream right now, well, I already have it added, so I'm not gonna edit one more time. The name for this indicator is global liquidity by quantitative something, 9,000 likes. Just put it on as an overlay for whatever asset that you're tracking. Today on the stream, I covered a little bit of it, so if you already saw, you can tune out, but I'm gonna dive deeper into how this indicator, what is it composed of, when does it go high, when does it go low, and how does it affect the prices of risky assets like crypto, and Bitcoin is still a risky asset. If you navigate to the gearbox, that's the check marks of what do you want to include into the global index, into the global liquidity. You see here Federal Reserves of top, 8 countries. So we have Federal Reserve and Treasury General Account, US, reverse repurchase agreements, that is also US, European Central Bank, that's Europe, People's Bank of China, Bank of Japan, and other central banks. You can also add here the money supplies, but the default is just balances of these institutions. So we keep it this way. And if you saw that when I edited it was in yellow, so you can change the style depending on what you need. But I chose blue because it suits very nice on the chart. You can see how the global liquidity, it's not just US, but countries all over the world, when shutdowns happened, when the COVID hit, when the COVID hit, they started to print like there is no tomorrow because they had to issue the economies were down, the economies were shut down, and there was no GDP being generated, there was no values being created, no products and services exchanged, sold, governments are not spending, nothing is happening. So where the money has to come? The money has to come from somewhere, because salaries still need to get paid, military needs to get paid, police officers needs to get paid, otherwise the society is going to collapse. They started to print because that's the only way how they can do it. And that's how we see on the global liquidity index an immediate jump, and that lasted all the way from March 2021 up until March 2020 until December 2021. For 2 years there was just printing non-stop. After 2 years the COVID numbers started to go down, there was a vaccine, there were some allegations that it's all fugazi, and it's all a conspiracy theory that there was no COVID. I personally don't believe that there was no COVID, because the reasons for shutdowns and lockdowns were because there were not enough pots in the local hospitals, and local hospitals had to rent containers, refrigerators, even to put dead bodies inside of those containers, because all those hospitals were overpopulated. And that's why the local governments had to shut down, not because the Fauci told them there is a COVID and everyone has to stay at home, but because hospitals were not able to host more patients. 2 years in, the hospital is already flowing, it's normal, the number of patients decreasing, and governments stopped printing as much, and then they started to raise the rates. Raising rates, the interest rates that everyone is waiting from FOMC, that immediately pulls out money out of the circulation, because the money becomes more expensive. And that's why we see a drop in the global liquidity index, because again, governments all over the world, and the main ones that we mentioned here, Bank of China, Japan, European Union, and US, they started to decrease amount of liquidity in the system. The fiscal policy has two ways to affect global liquidity. First is the interest rate, as I mentioned, and the second one, WALCL, at least on TradingView, and that's the balance sheet of the Federal Reserve. So the balance sheet of Federal Reserve can start buying things on the public market. They can go into the stock exchanges, into the private market stock exchanges, and they can also not only buy shares, but they can also buy bonds, obligations, debts. Companies issue not only stocks but also debts to finance their activities, and Federal Reserve can start buying those papers so that there is more money in the system. That way the money are being put in the system, because all of a sudden there is this big player in the market that buys. It creates buying pressure, and the companies, they see that big buyer, and then they start issuing more debt, and therefore money are created. The COVID hits, Federal Reserve starts buying, they buy for 2 years, they top, the balance sheet tops on April 2022, a little bit later after the global index topped, because again, balance sheet is just the US one, the blue line, it's other banks including. Since then, since 2022, we were in the economy of quantitative tightening. The before is when they're expending more money in the system. That's quantitative easing. They're easing the money flow into the system. And that's the time when all the speculative assets tend to inflate in price, because that additional money, the stimulus checks, they end up in the speculative assets. People see that, oh, you just received $1,200 check. Did you need it? No, you probably had the job, if you still have the job. A lot of people were laid off, of course. But a lot of people use those stimulus check to throw it into the Robinhood. We had the meme stocks. We had crypto increase in price. We had NFTs. A lot of people attribute the NFTs, the JPEGs that ended up cost more than millions of dollars, because of the stimulus checks. A bunch of money flowing into the system, that's quantitative easing. And when the economy starts getting too hot, when there is unemployment rate is so low, that when the prices start to go high, the inflation starts to increase, that's when the FOMC meetings and all of the chairmen of different, I believe there are 12 Federal Reserves all over the US, start meeting, and then they say, okay, economy is getting hot, we need to curb our inflation, our goal is 2%. They start to sell assets from their Federal Reserve balance sheet, and that's the purple line. They started to go down, and that's the beginning of quantitative tightening. And the second important thing is the interest rate. The FOMC, the Jerome Powell meets and he says, okay, we increasing the rate. It was 0, now they started to increasing it all the way until 5%. And that's again the second lever that they can pull on the economy when it's too hot, when the train of the US economy starts to moving too fast. Since the March-April 2022, we were in this constant quantitative tightening, lasting and still until now. You can see the purple line still decreasing, although it's slowing down, it's decreased. The global liquidity, even though you heard that the economies are open, the COVID is over, and the economy is hot, and this and that, and saying like we are in the hottest economy, and we are all these investments flowing into the country, and different job markets. You have the tech job market, you have the rest of the economy doing differently. Some places are increasing, hiring, some industries are shrinking. These indicators is the reality of what's actually happening with money, global money in the world, and it was just down all the way. We as crypto speculators, the crypto markets, it's impossible to have a proper bubble, a proper cycle and bull market when there is more money being taken out of the economy, more and more money being taken out. There is no cheap money in the market. We see that the global liquidity index, starting from this point, it established this trend line downward as it was going down. And then roughly around this point, March 24, 2025, is when we had a breakout in the global liquidity. It bounced off its previous resistance line, the black line that I drew, and it went higher. And that was the first signs that we are actually started to recover from and more money started to flow into the economy. Who caused this bump? It might be European bank, it might be the Bank of China, it might be Japan. I don't think it was US, although US did cut the rate. The first interest cut rate was in September 2024, which happened 9 months before September 2024. Right here, that was the cut in the US of interest rates. And when the interest rates being cut, it takes time for the money to flow into the economy, into the speculative assets, into the risky assets. This breakout, whoever caused it, it even went higher a little bit than the previous high. So in a sense, you can say that it was a higher high. And since then, we never went down. You can see that it's tried to go down, but it didn't. And let's switch back to Bitcoin chart. Now, talking about the correlation between global liquidity and Bitcoin, because each time there is more money, the more money means excess money, they tend to inflate the speculative assets. And in this case, we're talking about Bitcoin. This was the big fall of the global liquidity. It was going down, the Bitcoin price, and we had the collapse, not the collapse, but that was the end of the 2021 cycle when the expansion was finished. So everything was moving in unison, you could say, and then global liquidity started pumping March 2020. Before Bitcoin started to pump, we had 200 days until Bitcoin started to pump. So the global liquidity is pumping 2020, and then Bitcoin started to pump in October 2020. So that is your 200 days. So that's how you can say that Bitcoin is a little bit lagging behind the global liquidity. It's coming into the market, it goes into various directions, pumping certain assets, getting into the people's pockets, and then people then start pumping the Bitcoin. And it can be not only people, retail, but also institutions, because now they can start gambling with all the additional money that was created. So here we have the lag in 200 days. Then we reached the top, and then we start going down when liquidity started to diminish. And it's almost perfect. Just look at the correlation between the liquidity and the Bitcoin price. The lowest when the liquidity finds itself, and again, Bitcoin price is lagging, we reach that bottom point roughly 40 days later after liquidity bottomed. The liquidity continued going down, even though there were little spikes. And my exercise right now, the technical gymnastic that I want to perform is to show you. So here it bottomed, the liquidity bottomed, and then I will be marking the tops of the global liquidity with the tops of the Bitcoin. And here this is the top of the liquidity, and 160 days later, here the Bitcoin price, that was the top for Bitcoin. So 150, we mark it, we remember it. Later, we take this peak of the global liquidity. So this high up price we take the top of it and we extrapolate to the top. It's 100 days. So 100 days. For previous one was 150. So roughly 150, yeah. 150, well, it never went higher than this, so 100. You can say 100, and then from this peak, it was 90 days, yeah, so 100. This peak to this peak, 94, 100. Then we have this peak of the global liquidity, marking it down, 100. Again, each time we reach this, we have this pump in the liquidity, it funnels into Bitcoin and causes these spikes from 40 to 70, from 70 to 100. And then latest one was this uprise, right? From 80 to 100. So with the same logic, we take from this top moment of the global liquidity and we mark 100 days until the Bitcoin liquidity tops. And look at that, we land exactly on Monday, July 14th, 2025. This week and this week of this candle. So if you trade off of global liquidity index, you can expect 100 days later the price of Bitcoin to top. However, as I mentioned before, we had the breakout in the global liquidity when it didn't go down and actually broke out, and now it kind of ranges, bouncing off and finding it's a new support line. So we mapped this one to 14, but then we see there was additional peaks in global liquidity because we never went down. For this, it was almost immediate drop. But in our case, what's happening now in this market structure is that index showed us not only one top, but second lower top, and right now we're having a third lower top. So I would mark 1, 2, and this would be 3. Should we even consider this as the top, or because it's lower than, I would say this one, yeah, on the daily it's more visible, more this is the move that we're gonna track. So this was the pump, the second, this is the first, second, and this one is the third one that I want to map out and correlate on the Bitcoin relative to Bitcoin. Going back to this top to land on the 14, and look how perfect it lands at when we had Bitcoin at all-time high at 120. And I put this horizontal lines to show where it's roughly 100 days away from the peak of the global liquidity market. Second peak, we map out 100 days. This is where we land. Perfect all-time high that was for Bitcoin. And Bitcoin topped second time at 125. And that's when everyone is bull posting and saying, okay, it's a green light to 150. No, it's not a green light to 150. It has to either break out and immediately shoot up, or it's going down and continuing to range. Now, what's interesting is where this third one will end up, because 100 days, we landed on December 25th, one day after Christmas. That is, if you were to believe that global indicator, liquidity indicator, is something to be taken seriously, then December 25th, 24th, that's when Bitcoin might establish its new high in the certain range. It's not gonna establish all-time high because again, you can see that the liquidity is diminishing. These peaks are lower now. This is a lower peak. Fear and greed index is very low, so it's possible that we break out and we touch 100 or maybe even go below to 95, 96. We have this global trend line goes like this. If I open the weekly, you will see why this global trend line. So we might touch this area of 95, 93, but then we will return, and that's when everyone will be saying, oh my God, this is the end of the bull cycle, we are doomed. And you need to wait for that to happen, for fear and greed maybe even touch into extreme fear territory. And that's when you go in, you open your lighter, Aster and Hyperliquid, you pull up your 40x leverage and you ape into Bitcoin only, because for Bitcoin to go down from these levels, very unlikely. So not financial advice, but in these territories, when everyone turns extremely bearish, that's when you start placing your bets. Even now, some bets can be placed because we are in fear territory and everyone is so fearful that we're gonna break out from this range previously established by Bitcoin. Trade lower, leave the range, just like it happened right here. You see, we were in the range, then we traded lower, and then boom, we had this breakout that put us into the next level. So same is possible here, where we trade a little bit lower, we reach this global trend line, global support line of the higher time frame, and then we reach back to this line to October 25th. What happens afterward, I'm not sure, but you need to remember, let's list all of the bullish things that we have in store for us. The first one is we have another rate cut in December. And again, December 25th, we have this for the global liquidity, but also there will be an interest cut rate in December. A bunch of people are gonna refinance their mortgages. Banks will cut a lot of, the deposits gonna increase, so you can deposit money with a, decrease the deposit payout on your checking accounts. So a lot of positive news gonna happen, the money becomes cheaper. And if they cut interest rate, maybe other countries like Japan and European Union start cutting even before, maybe in November, because they're being more proactive compared to Jerome Powell. And the global liquidity might stay high, and we might print another, the global liquidity might continue to range. Also, Jerome Powell, the main antagonist and not enemy, but hates Jerome, call him too late Powell. He's going to retire, guess when? May 2026. Next year, in May, Jerome Powell retires. Surprisingly, Jerome Powell was appointed in his first term, and he's gonna be electing new appointee for chair of Federal Reserve. And the Senate needs to still approve that nomination, but Senate, I believe that whoever will nominate, they will get elected, because he has such a powerful voice into convincing people and public into things needs to be done his way. He's gonna choose definitely someone who's gonna aggressively cut the rate, and I would not be surprised if by the end of 2026 the rates will be 1% or half of the percent if they will cut it aggressively. Scott Bessent, the Secretary of the Treasury Department, the department that issues debt, US Treasury bonds, he's already on board with that interest rates needs to be cut much faster. There will be more interest rate 4 months into the 2026, Jerome Powell retires. New appointee gonna cut rates even more aggressively. In general, loves to print money. He devalued dollar even more than Biden did. He printed more dollars than Biden did in his term. Economy will be booming. All that additional money gonna be flowing into the US. All of the results of the tariff wars will be settled, hopefully with China, because we're already in the second half of this war with this additional 100% tariff that recently announced that caused October 10 liquidation event. However, in 2026, all of these positive things gonna come back. The liquidity gonna hit the markets, gonna slowly flow into the speculative assets like crypto. That's why I believe that would be the continuation of the bull cycle that we're still in. Right now, a lot of people gonna capitulate on their altcoins. They're gonna capitulate on everything that is not Bitcoin, but Bitcoin will continue climbing slowly, ranging, then climbing again, establishing new all-time highs. It's just the amount of dollars that was printed in the last 5 years has to make Bitcoin more pricey, because the dollar themselves become less valuable. The last thing that I wanted to mention is the narrative of Bitcoin being digital gold. Gold is printing all-time high. The chart of it looks just diabolical, complete explosion into the top. Bitcoin is digital gold. It's the easiest explanation to someone who doesn't know what Bitcoin is. Bitcoin gonna follow gold in the same way, because TradFi, just like they like gold for their when they want to de-risk a little bit and it's a safe investment, same they're gonna do with gold. Michael Saylor is helping them to understand why Bitcoin is more safe. For the Bitcoin to go below $93,000, you need to understand that Michael Saylor and other TradFi, other the companies who issue debt to buy crypto assets, they need to start selling their assets for the Bitcoin to go lower than 95, because they've been buying at current prices. And those people, those companies, the moment they start buying, no one else will be buying their debt obligations, their debt securities. And that they cannot afford to do that. They might wait until the Bitcoin goes back into the range, goes a little bit higher, but they will not be selling up to the late. Like, it's fine for them if their assets will be a little bit underwater, because again, they earning money through selling debt. 90k is the level when they are still profitable, and they're not will be that easily just selling their assets, because they are not some retail traders who are sitting with their mobile app and ready to jump in or jump out of their trades, because they are planning multi-decade outlooks and strategies. That's my big speech, why the global liquidity index is important, what's happening with that index, how to track it, how to map it, and all the reasons why right now we are in a good time we are setting up for the next swing in the crypto assets values. Thank you for tuning in, and see you in the next video.